Hello and welcome to another Trades and Tutorials video. This is Jeff Bish, president of MarketGauge.com, and in this video I am going to show you a quick little trick that will help you to not get left behind in markets that are moving up. In other words, you'll have a point to watch for any market that's pulling back to know that it might be time to expect it to resume its main trend. And this happens to be particularly timely considering if you look at the IWM daily chart right here, see this trend line that I put in? Now I don't know if this is going to represent the form of resistance to hold this market back right at the 200, or whether we'll look back at this and say, man, I really wish I paid more attention to the IWM's breaking out of that trend line that goes all the way back to 2015. Either way, if you have a way to know when it's safe to get in on the move up, then you don't have to worry about missing it. And the same idea can actually be used to make sure that you don't get caught if it decides to move lower. But before I get into all that, I just want to make sure if you're finding us on YouTube to please subscribe, and also know that you can find this video as well as others at marketgauge.com/tutorials, and find even more information by following us on Twitter at MarketGauge and at MarketMinute. Finally, you can see this video in HD. It'll be a lot clearer if you use the settings in the lower right hand corner. All right, so let's get back to the market. And if we take a look at the price action since the lows, on a big picture it looks great, right? We've been trending up. However, if you look at it more closely, the market has tended to move up, consolidate a little, move up, consolidate a little, move up not so much, consolidate, move up not so much, consolidate even more, move up, consolidate, pull back. In other words, it hasn't been really straightforward. But there is a simple pattern, and I'm going to show it to you in the SPYs. It works in the IWMs too, but SPYs have been a little more shallow in terms of the corrections. And if you've seen some of my recent webinars, this idea is a version of what I teach in those webinars to enable you to identify good inflection points in the market. And this is as straightforward as after the market has moved up and then starts to pull back, when do you look to, or when do you anticipate that the pullback may be ending? And I'll just change my color to blue. So if the market's pulling back here, you want to watch for the prior day's highs, and when you take out that prior day high, that's the inflection point that you're looking for. Now, is this always going to work? No, but what it will do is it'll prevent you from getting sucked into a market that really isn't going up yet. Stop trying to catch those little small lows, which turn into bigger lows and bigger lows. You know what I mean? It just keeps going down, and you wonder why you thought it was going to go up in the first place. All right, so step number one, watch the prior day's high. As soon as you break that, then you're going to look for more confirmation that it's going to move in that direction, and that's your first step to know that it's going to move in that direction. So while this isn't a huge move, right, if you're looking for it to turn higher there, and it eventually gets up to there, that's a pretty big, pretty decent move. And in fact, when it pulls back right to that point again, and that is not uncommon. And then back. Now you get another pullback, right? So you get a pullback, and here's where you take out that high, and what happens? Starts moving higher. Now it only goes one day higher because it gaps higher, and then pulls back again. Then you do the same thing. There you go. Back up again. Now pulling back. Now here, little trick, if you don't really pull back at all, in this case you consolidate, then you want to be above the consolidation. And so in that case, you don't get chopped up, pull back, back in right here. Now I'm not suggesting that you're in and out, in and out, in and out. What I am suggesting, however, is that if you're in a good uptrend, you can look for this simple pattern. Now, I said earlier, it doesn't always work. So of course, nothing works 100% of the time. But you can make it work even more effectively if you're not just waiting for that move above the high, but you only do it when the market has a specific pattern in that pullback, and you do it when you're in a good trend, and even more effectively, so the S&Ps have had a really nice move up off the lows. It's can't argue with this move, right? But if you're doing the same thing in individual stocks, so let's just take an example, and I could really pull up any stock that's trended really well. Stocks will tend to trend even better than the overall market. So WHR, really strong trend here, pulls back, happens to be right at the 200, take out that level, and nice trend up there. So you get several days of trend, not just 1 or 2 days of choppy, frustrating trends like you get in the market. Then it pulls back right here, and here's your trigger again, up, 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 up again. A nicer trend, pulls back again, trigger, up, 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 up. So if you can identify the right stocks, you can dramatically outperform what you can do in the overall market. Doesn't mean you can't do the same thing in the market. And WHR, big stock, big cap stock, so it's going to work in there. FBHS. Now this one's a little bit more volatile, but as a result, it's also, I shouldn't say as a result, but it's also going out to all-time new highs. So right now the market is struggling at what will soon be its 2015 highs if it moves higher. But some stocks have already broken out. They're moving higher. Some stocks are about to break out. These are the stocks that you can get into on these shallow pullbacks before they go to break out to these new highs. So when they get to those new highs and you see the volatility like you will often see at new highs, this is a good example why I brought it up. So at these new highs, you have this crazy volatility here, which may ultimately break out, right? But if you get in before that, then you're more likely to be able to sit through that without having to worry about your P&L, right? So if you know that you have a good strong trend coming up here, you know how to watch this pullback, when to get in, when you have the right pattern, then when it starts to get up here and chops around, you're just letting it chop around because it's not the difference between a gain or a loss here. It's just the difference between how much you're making on a good position. Some of you, if you've been paying attention to some of my recent webinars, know I've been watching Amgen and other biotechs. And so here's another example of a turn. It pulls back, get the signal. Now it has a nice move up to the 200, some volatility around there, a little bit of a pullback, again the signal, again a signal. So now with Amgen, while I've been able to kind of accumulate the position starting down here, I don't have to worry about all this resistance here. In fact, I look forward to seeing whether or not it can get through it, and I can have all this volatility it wants to do up here because my cost basis is down here. So just understanding how to get into a stock that is beginning to turn or is already trending and pulled back slightly, which is exactly the type of environment we have right now, can help you in a number of different ways in your swing trades, also in terms of just quick hits on either day trades or short swing trades. So keep an eye on that prior day's high. Also, make sure you get to know some reliable patterns that happen on pullbacks. That'll help increase your percentages of wins right off the bat. All right. Now, if you're interested in this kind of thing, I am going to do a webinar this week, and I will put the link in the text that goes along with this video. Whether you attend the webinar or not, make sure you pay attention to those prior days highs on pullbacks in trends and identify your own patterns. We're going to talk about stuff like this in the webinar. I'm also going to talk about very specific patterns to look for that lead to this particular approach being even more effective than what I've shown you right here. Hope that helps, and I'll see you in the next video.